my name is Jonathan Martin, and I am the Director of Business Development at Horne. We're a full-service accounting and tax shop to thousands of franchisees across the country. And we're joined today by Taj and Adhav, the CEO and co-founder of Leasecake. Having worked in the Big Four and practicing for 15 years, he's bringing his insights to a very large, broad customer base. And we're super excited to provide an educational 30 minutes for you guys.
Sounds great. Thanks a lot, Jonathan. Well, good morning, everybody. We're excited to share not necessarily a deep technical dive into the calculations and all of the facets of ASC 842 that can be absolutely fascinating. This is really more of an educational piece, and really excited to share some of those secrets. I'll go ahead and share my screen back. I think we've got a few more attendees joining. It kind of feels like it's almost standing room only, in fact, with the number of people chiming in. So it's exciting.
Good deal.
Well, great, Jonathan. Turn it over to you.
Yeah, excellent. So, Horne and just in general, when it comes to, working with a CPA firm, we take a very broad approach to technology. Investing in technology for Horne is critical. We are always forward-looking at technology to incorporate into our accounting and reporting for our clients that will make new requirements from the FASB or GAAP accounting, whatever it might be, to ensure that our clients are getting all of the appropriate updated IRS standards in their accounting. For us, we think about the investment as an investment in our client's future, because when a client, a multi-unit owner of any franchise concept, is looking to have a transaction or participate in a transaction, be it an acquisition of someone else or anything like that, it's really important that our clients they have all their ducks in a row. And so for us, if that means bringing in third-party applications for our tech stack, we do that. And it really makes it so that changes in standards from the IRS or whatever it might be are approachable and manageable by us when we're doing the accounting work. So all of those technology components are critical for us, providing a streamlined accounting process for our clients. So the big picture, the ASC 842, Taj is certainly going to dive into a little bit more. Again, like he said, we're not going to go super deep into this. This is just going to be a high-level educational discussion, but there are just a couple of big picture items to cover here. One is that the broad takeaway for anyone on this call is that all of your leases now are going to be required on your balance sheet to be in general accepted accounting principles, or GAAP. For most of you who are multi-unit franchisees or are familiar with multi-unit franchising, getting your financials into GAAP is very critical for a number of reasons, which we'll address later in the webinar. But it becomes more specific and important when it comes to your financial statements themselves, because it's not just a P&L issue for lease payments and tracking that. It becomes a liability on the balance sheet. So the assets and the liability piece of your lease management is huge, which again can just lend itself to the operations and dispositions and all the financing necessary to acquire locations or divest locations. So this new ASC 842 requirement has substantial impact on your business and the way you account for leases.
And you had an example, Jonathan, specifically as it relates to dispositions or even financing, right? Lenders and loan covenants. I don't know if you wanted to touch on any examples that you've seen recently.
Certainly can do that right now. Yeah. So I just have gone through a transaction this week with a client that has 20 plus locations of a sandwich concept, and the acquirer of the business, it was a real struggle to get the lease abstracts and to have them all in one place, and to have them accounted for appropriately on the balance sheet, and to make sure that the person doing the acquisition knew what they were buying from a lease liability perspective. And so the clients that we do have that leverage a platform like Leasecake, that's a breeze, because it's all in the right place. The accounting is done, it's clean, it's buttoned up. In this particular transaction, the person doing the acquiring did not have access to that data for the stores that he was buying. And it took a significant amount of time for us to collect all of that data. I mean, we're talking several weeks of back and forth emailing with the landlords and dealing with the banks. So it's so important to have, is sort of accounting jargon as this might all sound. It impacts real life. I mean, it impacts real life transactions with acquisitions and buying and selling of any franchise. So it's very important to have all your ducks in a row when it comes to leases.
Exactly. So obviously we're going to certainly touch on the secrets and we'll get to that. But as it relates to this new standard, I mean, this is probably the most impactful, most far-reaching standard in the past 2 decades. If you think about how leases were accounted for, there's over $3 trillion of unrecorded impacts to financials that are missing from financial statements. So it is absolutely significant, massive, massive change. And if you think about kind of what is it, as Jonathan said, it's nearly all of your leases will be on the balance sheet. So it's simultaneously an asset and a liability, and it requires pretty complex net present value calculations, a series of cascading events, not only for your one location, but across all of them, including your renewal options if you have a reasonable likelihood that you'll be renewing. So, why is ASC 42 being rolled out? Well, because it's about financial statement comparability. That's the purpose of financial statements, to easily compare one company to the next, but it's important for lenders and investors and franchisors. Because back in the day, I think if you remember probably back in the 70s with airline companies being under audit, auditors would say, so where are your airplanes? In fact, airplanes were never on the balance sheet of any airline companies back in the early 70s. So it started to get people's head scratching, right? There's thousands, in fact, hundreds of thousands and maybe millions of airplanes around the world. But that was one of the head scratching moments. It's like, okay, they're all leased from the airline manufacturers. Fast forward, then there's Enron and WorldCom. All of those debacles really started to get the Financial Accounting Standards Board to think about how best to increase comparability and visibility. So way back time machine. If you look at cutting a check to your landlord, it was simply credit to cash, debit to rent expense. The standards that started to get rolled out, I think it was FAS 13 back in the mid 70s, was really this ASC 840 standard, which was taking all of your lease obligations, including the rent steps, for the entire duration of your lease term, including the option periods, and straight lining them. So it impacted and created a deferred rent balance on your balance sheet. But that was pretty much it. It was pretty much all a P&L transaction with deferred rent sitting on your balance sheet. So today now, with ASC 842, there's probably 6 or 7 accounts that are on your balance sheet that have to be created, in fact, even done monthly or certainly quarterly, but definitely by year end. So it's a fairly complex effort. And that just kind of shows you how things move from the P&L, where there was no visibility to these assets and liabilities on any financial statement, and now moving it to ASC 842. Again, the largest change in at least a couple of decades. So, why does it matter? Absolutely, compliance. It's complicated. It's hard. It takes a great deal of effort, and whether it's finding your leases, you've got to create new processes internally within your company. Looking at what are the policies and what are the guidelines, but as a new lease is signed, or as an expiration is occurring, or as a renegotiation happens, you need to have a system in place that's really kind of your key company policies. So what is that monthly closing process as well? Making sure your accounting team understands all of the facets of it, and it's not just a simple ASC 840 journal entry anymore. So it requires more work. And it's going to impact your team. You may have, probably why we have maybe standing room only on this call is because it's a standard now for all privately held companies with financial statements after December 15th of 2021. So any financial statement, any company that's private that has a financial statement in this year and beyond will need to be in compliance if you feel that gap is important for your business. So that's a can that was kicked down the road by the Financial Accounting Standards Board. in 2019, it was absolutely a requirement for all publicly held companies. And privately held companies, they held it off in abeyance for about a year. Then obviously COVID hit, and it extended it out another year. But now the can no longer be kicked any further down the road. It is on us this year. So it's a lot of fun. But did public companies get through this thing unscathed? They started 2 years ago. They had a head start. There were still problems. So absolutely, big problems of understanding where their leases are their full rent schedules built out? Are they PDFs, documents? And that might seem a bit mundane, but it is definitely a challenge. The bigger challenge is lease abstracts. Many large publicly held companies are going through a complete reassessment of their lease rent schedules because they weren't correctly abstracted. The accuracy of your financial statements depends very much on the accuracy of those rent schedules. So that's absolutely occurring today, where publicly held companies are revisiting that and going back and making sure that everything is up to snuff. And then there's interest rate calculations, NPV calculations that are the determining factors, whether you choose an incremental borrowing rate or risk-free treasury rate. Debating that going back and forth is costly, and sometimes it's a mundane exercise. But if you start too late, you're going to get caught in this morass. And it's really about avoiding the storm ahead. Jonathan, you want to take this slide?
Yeah, absolutely. So it should resonate. And again, so the fact that this is the biggest change in accounting standards in over 20 years is a big deal. It's not very often that you can say that unless you're talking about income taxes. But when it comes to compliance like this for private sector companies, it's so important. And this slide is great because really it encourages you all to think about making a plan. If that's talking with your CPA firm, if you're using a group like Horne, Horne leverages Leasecake, or even if you're using Leasecake directly, having that in place is critical, so you don't have to try to figure this out and rush and get all booked and you're in, because that will cost you a lot of money and it will cost you a lot of time. Setting those policies and those internal controls for how you're going to manage and track all of that, it is so important because of your audience. And like I was referencing earlier, buyers, lenders, auditors, if you guys are looking to sell your businesses, for example, typically if there's a quality of earnings that's in place or being discussed, or even if there's an audit by your bank that requires, if you have a certain amount of debt on your business and your bank requires an audit every year of your financial statements, you have to have your ducks in a row when it comes to ASC 842. You have to have those GAAP financial statements on your balance sheet capturing all of your leases and everything that Taj discussed. And then once that's in place, then you can perform and you can have clean financials. You can have exactly what you need and have bank-ready GAAP balance sheets that capture all this correctly. But again, we just highly encourage you to avoid kicking the can, because you can't do it anymore. 2022 is the year, to Taj's point, that you have to have all of this booked correctly for year-end financial statements at a minimum. So we would certainly encourage you guys to reach out to both of us afterward if you have questions about how this all should work.
Yeah, absolutely. So, the storm ahead it's obviously it's planning, but understanding your audience is very important, because they can cause that storm. If your auditors don't have buy-in to what your policies are, if you haven't spoken to your lenders about loan covenants, they're not understanding what the expectations are. This is about making sure that you either drive through the storm, right, or circumnavigate the storm and get well ahead of it and have that put behind you. So it's absolutely about remembering your audience. We'll come back to that. So Jonathan, why don't you take this slide? I think you've seen some experience with this at Horne.
Yeah, sure. So in my prior career, we were a very technology focused firm, not unlike Horne, and the bulk importing of data and trying to track all of your leases on a Google spreadsheet, that's just not going to be sufficient going forward. At this point, it probably worked where you could duct tape together how to track your leases and try to be able to contain your lease abstracts and have that data readily available. But I can tell you, we just onboarded a very large franchise group with 70 some odd locations, and The gentleman who's the owner tracked all of that on a spreadsheet, but he admitted to me, listen, I've missed a couple of details that I didn't have because I just didn't know that this particular lease at this particular location required some sort of specific loan covenant reporting verification to the landlord. Leases that are based on revenue or sales, and all of these things just become quickly you can lose control of them quickly. And so we don't want to you guys don't want to have this process of just going, well, yeah, we have a spreadsheet. We have a spreadsheet where we can show you all of our leases. That's just not going to fly anymore after this year. And so having a much more comprehensive one-stop place to identify all of these items that you guys are going to need is so paramount once this is implemented. Or now that it is, rather.
Yeah, absolutely. And so, we take a much more kind of consultative approach, and that's what's great about Horne, that it's not just technology, it's about the people and process asking these questions. So the kind of the multi-dimensional facets of a provider that meets all of your multiple business needs, I think is definitely important. So
yeah, and
right.
We talked about, prior, there's not just an automated technology fit. What you all have built is unbelievable and we love it. And to your point, you still have to have good people in place that are managing this and are making sure that everything's being implemented. It's not just a software you just click and go. But I'm telling you, it's a huge step. It's a huge step in the right direction of everybody getting their financials correct and stated accurately, for sure.
Thanks, Jonathan. Yeah, so this is really the secrets. It's an ASC 842 implementation readiness assessment. Make sure that you follow a step-by-step guide of is your company and is your team ready about the key areas. Do you use ASC 840, right? Step one. Are there any upcoming audits you're planning for? Are you wrapping up a 2021 audit right now? And has your auditor chatted with you about those implications? Is there an upcoming transaction? We talked about buy-sell transactions and also certainly loans and loan covenants. What are those key policy decisions that you've made? What internal control guidelines do you have in place? And what are the transaction components in every one of your real estate leases that you need to pay attention to? So we'll drill into those a little bit deeper. So if you're on ASC 840, and it's surprising that many people across the industry that we've spoken to, including a few of our customers, they're not sure what their policy that they're using. And when we look at their balance sheet, we see that they do have a deferred rent category, and they recognize that it's ASC 840. So make sure you have your amortization schedules, your straight line schedules for all of your leases. Make sure you know where those are. Look at what your deferred rent balance is that you would want to transition to 842. Definitely has an impact. And also, obviously, what accounting cycle you're on, whether it's 12 months or 13 months. But it's very important, specifically if you're on a 13-month accounting period, fairly common in the retail space and certainly in the restaurant world. But make certain that you not only know what your accounting cycle is for the next 5 years, but every one of your leases that go out into year 2030, 2040, 2050, your accounting close cycle needs to be forecast way out into the future because it includes those year-end resets. Everyone uses most everyone in the retail side, they use a different way to calculate it. Sometimes it's the last Sunday, December 30th or 31st, and it resets every 5 or 6 years. Some people say, you know what, we're going to let it run out for 15 days and then do a massive catch up. So knowing what your year-end calendars are for not just the next 5 years, but throughout the longest term of your lease is super important, because what you're going to want is you're going to want to see an amortization schedule, and your auditor will as well, that nets all of the right of use assets and right of use liability balances down to zero. So anyone that's on 13 periods, talk to Horne, make sure you go through what those amortization schedules and what your year-end cycle is. All right, next one. And we are looking forward to your questions here at the bottom of or at the top of the hour, I'd say. But the next topic is make sure you have a conversation with your auditor. Make sure you have a conversation with your CPA firm. If it's Horne, that's great. If it's your other CPA firms, definitely want to make sure that they're also prepared and they understand the nuances. The key takeaway that we continue to hear is, yes, while there is a standard, ASC 842 has pretty detailed compliance policies to follow. There's still some discussion and debate amongst even the big four in how to treat certain facets of those lease transactions. So it's really important to make sure that your auditor understands what your policies are, and have a conversation with your lender as well. If your lender has not reached out to you about ASC 842, how does that impact your loan covenants? It's important to get ahead of it. Make sure that you reach out to them, because there's a whole series of financial ratios that could be impacted. In some cases, your lenders might say, you know what, we're fine for the next few years doing an as-is financial statement reporting. But if your lender needs to get armed on what ASC 842 is and how it impacts your financials, or even the financials of all their clients, have them get on the phone with Horne. So sale or purchase, we talked about that. Just be prepared. Even if you're acquiring any locations, you're expanding, and if your seller is already GAAP compliant, you'll just need to understand that, oh, there's 842 right of use assets and balances on their balance sheet as well. So those policy decisions, super important. One of the key things from the starting of any conversation that we have with our customers is, hey, what rate should I use for the NPV calculation? Should I use the IBR rate, the imputed rate in the lease, or the risk-free treasury rate? And it's important to make sure you have that conversation, not just internally from a policy perspective, but with your auditor. You do not want to get into a debate with your auditor about 16 basis points of why you shouldn't use the risk-free rate or the IBR rate. Make a policy call, stand by it. Most people opt for the risk-free treasury rate. It's very easy to calculate. It's promulgated by the U.S. Treasury, and it's absolutely a fixed number. However, there are many people that say, you know what, we're going to use this standard rate of X percent that's imputed, but you don't want to get into the system of looking at each individual imputed rate across every lease, because it's going to cost you a lot of money. And whether it's auditors or accounting firms, God bless them, these are the debates you don't want to have to go through. So make sure you know what your adoption date is. Typically, January 1st, 2022 is when people have chosen to adopt. Some of our customers have adopted in advance of that, so a year prior. But having that operational cycle, when do you look at any new terminations, expirations, renegotiations? Make sure you have that memorialized within your team so you don't fall out of compliance. You just need to have that review cycle for any kind of market conditions that are changing. And then, this isn't necessarily the last, but it's probably the most significant. And we'll send an updated PDF of what all the different types of questions you should be asking from a ASC 842 readiness perspective. And it's about TI allowances. How many releases have TI allowances? Where are you in the burn down of those? Are you, mid-cycle where you're still expecting to get reimbursed by your landlord because it's straddling an adoption date? What lease prepayments do I have across all of your locations? Have you been entitled to get early access well before opening? Because that impacts the term of the lease, even though your lease might commence later or the rent commences later. All of these are super important. And again, happy to go through some of the details, but we're covering it at a high level. Rent abatements, a big thing during COVID. Any transaction fees, do you capitalize or keep track of or impute in the lease? Any broker fees, any transaction fees related to that? Renegotiations, early terminations, these are all super important. So Jonathan, you want to take this and we'll talk a little bit about some of the capabilities that we have.
I'll talk to you about just briefly why this is so important from an accounting perspective. One of the things that I wanted to bring up is, one of the timing of when you might do your reporting. What I think a lot of people aren't aware of, and let's say you guys are on a period-based reporting and maybe your fiscal year started at the end of 2021, that triggers you all having a fiscal year into 2022 that might require a 21 and 22 financial statement comparison, both of which would need to be in GAAP. So again, the timing of when you all, again, this is a question to ask your CPA or to reach out to us and ask. But the timing of when you would be required to start being in compliance is huge. So we were brought Leasecake basically by a client who needed to get into ASC 842 compliance, and the client was growing very, very rapidly. They purchased a store in a lot of different states, and frankly, kind of like the client I was referencing earlier, they got tired of tracking the payments and the renewals and doing it all in a spreadsheet. And so my first experience was this client needing the ability to have that automated and tracked in one place and having all the details. So what we very quickly realized at Horne was that leveraging Leasecake to actually track all of those details and having the ability to automate the entry, it made it so much cleaner for our clients' accounting on their balance sheet to have accurate financial statements. So we quit messing around with all these spreadsheets and having to try to implement some bulk upload spreadsheet from the client. And now that client is in GAAP compliance. We know exactly how to keep them there. We know exactly what the entries are going to look like. Loan covenants are all being met. Reporting to the banks, all of those boxes are being checked. And frankly, it's not just a software either. Like Taj mentioned earlier, the people plus the technology is what makes the service so valuable. Having somebody from Taj's team to be able to answer a question, even for us on an accounting side, hey, is this entry necessary if this type of scenario is taking place? And they always have the answer. And so having this in place for us has been just game changing with the number of multi-unit owners that we provide accounting and tax for. So it's been fantastic. Can't say enough about it.
Thanks, Jonathan. Well, I think the challenge that we saw in the market, the opportunity, frankly, is just, we keep talking about location. Where's the app for that? And it ultimately, locations of your clients are super important. It takes months or even years to find that perfect location, and it's a key part of your business success. But commercial real estate is really inefficiently managed. There's a lot of outdated systems. It's back to this multi-dimensional approach where you don't want to be caught, I guess, short-staffed or be caught off guard by any kind of a critical clause or date that's missed in your system. And having information in the palm of your hands for all the facets, let's make sure that not only do you as a multi-unit operator get impacted, but having a shareable system for all of the providers that you work with, not just your CPA firm, but also your lawyers, your lenders, everyone that has an impact of how to help your business succeed is important. So let's break down those knowledge silos. And ultimately, it's having information in the palm of your hands. And it's about making sure that you get a single source of truth where all of the information, not only for your lease and your location, is quickly available, but this is about us helping you be in the answer business, getting fast answers to what matters the most, and also increasing your awareness of those things that are beyond real estate, but anything supporting that, whether it's certificates of insurance, permits, and licenses, as well as collaboration to allow you to take action for you and your team, including the team at Horne. Many of our customers add Horne as a trusted team member, so they get quick access to information and allows them to collaborate more closely with you and your group. So it is about your location. That's what matters the most. We're a location management platform. And it's about real estate stuff, right? Critical clauses, rent schedules, but there's also specifications, equipment lists, anything that you'd want to keep track of in a flexible platform, because you need to get advanced awareness of those things that matter, right? Setting up those notifications on those renewal options. Again, these things will trigger a potential reassessment or remeasurement of potential, lease termination or lease renegotiation or an option for ASC 842. TI allowance is also a big factor, making sure that those are calculated and captured correctly in the ASC 842 schedule. So It's a system that allows you to get fast answers. It's proactive. You get all the information about your location. It's organized and it's infinitely shareable. Full rent schedules, making sure that you have all of the abstracted lease details, renewal options, dates, reminders, whether it's tablet, mobile, or a desktop, you need to have that information. So the full rent schedule is absolutely imperative. Make sure it's accurate for ASC 842, keeping all of your documents and critical clauses, and again, all those custom fields and events that matter. And the last is really about collaboration. Collaborate with Horne, collaborate with your team, make sure that you can reach them, make sure you have this kind of a mini CRM system to allow people to do more with less. I mean, God knows it's been an incredible last couple of years, but the need for efficiency, the need for much more dynamic, instantaneous access to the things that matter the most are super important. So collaboration is key, making sure that it's all set up for you. So who does all of that? And it's really us. In conjunction with Horne, you turn all of your documents, your leases, we'll build it out and make sure that you're set with a good foundation. We've got a team of all US-based lease analyst professionals. They're attorneys, paralegals, real estate officers, coming from some of the largest brokerage houses with tons of different disciplines and decades of experience, thousands upon thousands of leases. But it is about humans. It's about people, not just technology. You need to have experts on your side. So think of us as a little bit like your outsourced real estate team for what matters the most. So we're here, it's top of the hour, at least here on the East Coast, 11 o'clock. Happy to answer any questions that you have. And let's just open up the floor.
So there is one great question that came. I don't know if you want me to just read it to you or if you can see it.
Yeah, you can paraphrase it, sure.
Great. Okay, so this is a perfectly timed question because you just covered a couple of slides ago. But this gentleman, Mike, is asking, how do you obtain monthly reports of rent expenses due? How can you obtain monthly reports stating that this is the CAM, the taxes, the utilities, the public user fees, and abstracting all that information? How do you guys go about, if I'm understanding his question correctly, how do you all go about collecting that from the client? Therefore, you can then turn around and put it all in one place for these guys.
Absolutely. No, that's a great question, Mike. So thanks for asking it. The way that we approach every implementation is, first of all, make sure we have all of your leases. The inherent key is, what is the commencement date of your lease? Many times it may not be clear because it's dependent upon 30 days after getting a COI or on the date of grand opening. So we work very closely with your team and even getting in contact with your landlord to confirm what those start dates are, and any vagaries that we encounter, whether there's a TI allowance that's not quite clear, we will be the ones that will help you and your team reach out and get those answers. So we take this very seriously. We put together an entire checklist, lease by lease, location by location, of what data is missing. So you've hit the nail on the head. That's part of the planning, because if your team doesn't have those answers, who can help you get those key questions resolved? And that's where we come into play. Our lease analysts will reach out and help you fill in and populate that information. So great question.
A quick follow-up as well. So when it comes to the actual journal entries that you guys automate that we love at Horne, it's fantastic for us. But let's say it's not necessarily Horne or it's not an intact integration. How would somebody doing it on their own or maybe using another third-party accounting firm get those journal entries for the ASC so they're in compliance? And what systems do you guys integrate from a general ledger perspective?
Yes. Yeah. So the whole implementation readiness assessment guide that we'll be publishing talks about that. So it really is dependent upon what system you all are using and whether you're comfortable. Any one of Horne's clients, if they're comfortable with this automated integration of pushing data in and pushing journal entries in, we can create a file that you as Horne's client looks at and reviews before it's ever published. So we can certainly integrate with, the NetSuites and the QuickBooks and the Sage and Tax. But what we found from a practical standpoint, our customers or CFOs, VPs, finance, and controllers would rather see the actual entry and then decide to import it with a CSV. So can absolutely do it. It's a wonderful question, but I think it leads to maybe another follow-up question that's somewhat related is how often do the entries need to be made? We see those entries being made monthly. Some cases, again, this is a conversation you need to have with your CPA firm in Horne to do those entries on a quarterly basis. Depends on the cycle of when you need to provide financials to your various audience members, but certainly at year end. So our reporting can deliver those monthly journal entries to you on a consolidated basis. And then you have to decide whether, do you really want our integration to tie directly into your system? Happy to do that.
And then there was another question, which is actually a really good question. When it comes to short-term leases, or you might even consider like a timeshare lease, where does that fall in the requirement standards?
Yeah, the guidance is that any lease that's less than a year is not required to be going through an ASC 842 implementation. It's really related to 1 year or longer. So that's a great question.
Excellent.
Yeah, these are great questions coming through.
Yeah, there are. Let's see.
There's another question about how much longer can we actually wait, right? I mean, certainly, I think everyone knows that it's by year end. Any financial statements, whether you got an October financial statement year end or whether you've got a December year end, I think it's really important to make sure that you start now, start planning for it now. You can try to choose to wait and say, man, it's 4 days away from filing your taxes, and you got a whole bunch of kind of payroll reporting to happen. It's so easy to just say that, man, I'm busy. Let me look at it here in a few weeks. To be clear, no one is ever going to be less busy than they are today. So just make sure that it's on your radar, because if you've got a quarterly or a semi-annual set of financial statements that you need to publish, the time is now.
And just so we're clear too, another question came from Bill. He said, what about just a 1 year specific defined lease that has a 1 year auto renewal? I believe that still counts. I mean, that still falls into the requirement, correct? Yes.
Yes, absolutely. Because the question that you need to ask yourself and your company from a policy perspective is, if you have chosen to agree that the likelihood to renew is very high, then for that 1 year lease that it will be auto renewing, you need to consider it a 2 year lease. Now, if it's a continual renewal, then I'm sure that there's probably a time frame upon which you would have a termination date of that lease or an expiration date of that lease, but it's a key part of your policy. So let's say the lease expires in the year 2080. You'd have to capture it here for the next 58 years. But that's a good question. Auto renews are fun.
Indeed. And maybe you have an anecdotal story, but I mean, I have one where we had a client recently who, to your point, kind of at the beginning, I can't really impress enough on the audience what the cost could be if you have to go back and correct this later. It can be a very significant lift for an accountant or a CPA firm to go back and clean up your balance sheet if you guys go this whole year and don't start getting this in place and start planning for the storm. That's how you put it, which is very, very perfectly put, because it's no small feat to request and have to go to your accountants and say, hey, we need you to get us in compliance, from 12 months ago. Of course, they're happy to do it, and we're always happy to get you in compliance and take care of you. But I will say it's so much better to get ahead of this before you're buried and having to go backwards and do a whole bunch of journal entry adjustments to clean everything up. So highly encourage you guys who are listening and watching to reach out to either one of us so we can make sure we're getting your ducks in a row. Let's see how many times I can say ducks in a row on this one.
It's definitely important. Yeah, so as I said, if anyone is interested in learning more, feel free to direct message us via the chat. This is where Jonathan and I can both be reached. But just to reemphasize, Horne's approach is a very consultative approach, very thoughtful, very much process and value add minded. This is much more than just technology. Fill out a bunch of forms, hit a submit button, and lo and behold, you've got an entire amortization schedule that works. You need to make sure that you have a policy and a set of guidelines. So we're hoping that this secrets of implementing ASC 842 has been helpful for you all. You've got my email, taj@leasecake.com. We've got Jonathan's email. We're happy to assist. Definitely shoot us a note, but we look forward to helping you ultimately kind of weather this storm together and be one step ahead.
Go
ahead.
I just confirm to everybody, we will be sharing the recording. Ashley had asked if we're going to be sharing the recording out to the folks who had joined. So the answer is yes, we'll be sharing that with all the attendees.
Yeah, sure.
Yeah, I think it'd be great. I know that we have people who couldn't make this that I know really wanted to see your insights, Taj, into what we're talking about. So I think that would be huge. And somebody's asking me if you guys at Leasecake are going to be involved at I can't remember if Matt and I talked about this. Are you guys going to be at the Worldwide Rally for Domino's, or was it? I think it was a little too late, wasn't it? Didn't we? I think we actually have too late.
We're going to be at every rally, every leadership conference, to the extent that we absolutely can. But if there's anything that you need us to pay attention to, I mean, certainly the Worldwide Rally, yes. But if there's any specific event that we may not have on our calendar, definitely send us a note. There's so many different, not just franchise organizations, but corporate brands as well. That I know, Horne, you've got a great mix of all sorts of corporate customers as well. So we're looking forward to being where the action is and ultimately kind of consult and help you guys succeed. All right. Well, I think it's a wrap. Appreciate everybody's time. Jonathan, you've been stellar as usual. And we'll be doing a few more of these as well. Kind of think of it as kind of a summer series as we move off of spring. Thank you, everybody. Take care. Bye-bye.